Hey folks, Joe Baker, Trade Pilot Pro. That was one heck of a day today, huh? Big reversal. I said last night's video, for any of you that watched it, that the hammer, the end of the chart, is usually a reversal. However, I didn't see enough volume, and I said I was suspect because of the chart pattern, the way it's setting up, where it's this long liquidation and this sideways move, that I said last night's video that this could roll over and come right down. Okay, what happened today is, you remember I mentioned that we came down, okay, on, what was it, Tuesday, with 3.2 million contracts. Today we came down with 2.4 million contracts. What that tells me is that we have retested the low and we have retested it on lighter volume. Now, if I was trading intraday and I was looking at a price point, and let's say, market goes down to 1272, 15,000 contracts traded, went up and then came back down 1272 area, and say we had about 9,000 contracts traded. That would be a bullish for me. Okay, I would be looking to buy that. I would be checking my other indicators, confirming. However, that would constitute a buy for me if I was trading intraday. So I have to look at it as big picture, as this constitutes a buy for me here, because we have actually retested the 61 level on a lot less contracts, which that's a successful retest. Now, can we take this area out? Yes, we can. It's going to be light volume tomorrow. From what I'm hearing, 50% of the traders are there. 50%. So they could push it any which way they want. If they want to bring it down and do some accumulating, they can do it. So they can push it and then buy it and then run it back up. So you got to be very careful tomorrow. Whatever your systems are, whatever your setups are, don't ignore them. Don't fight this tape. Don't fight this market. It may be a little irrational because the volume is going to be so light. However, we also have Trichet at 7:45 Eastern Time deciding the interest rates, and they're talking about him possibly raising. And I don't, if he really should cut, because the euro is strong. It's hurting their exports. Our dollar is so weak, it's killing us with these oil prices. A lot of things. A lot of guys will hedge the dollar in oil. So everyone's always blaming one person or another. But if you look at the underlying, factors, that yes, oil is pegged in dollars. So if the dollar is getting weak, they'll hedge with oil and buy oil as a hedge to the dollar, like they do with gold and so forth. So, they just cut a little bit, it would kill the euro. It would increase our dollar. People would take the hedge off. They'd sell oil, sell gold. The euro would drop, and our market would go up. But hey, who am I? I just trade the markets. But that's my 50-cent economic lesson. I could probably be wrong, but at any rate, a quarter-point cut wouldn't kill them, and I think it would really help all markets. But at any rate, that's what I'm looking for. So 7:45, if you guys are out there and you're trading pre-market and you're not aware of what they're doing overseas, be aware, because this market is going to take a big move at that time, either up or down. That being said, let's go over to the pivots. Okay, here we are. I'm going to put my line in the sand tomorrow at 1268.50. That's 1268.50 is my line in the sand. Okay. Right now it's after hours. We're trading at about 1268.50. So I'm looking at 1268.50. I'm sorry, we're trading at 1264. I'm looking at 1268.50 to get kind of bullish. Again, I'm going to be very cautious tomorrow, all day. I probably don't even want to trade all day. I probably will only trade a half a day myself. And then we have a breakout at 1270.25. So that's 1270.25. That's a breakout buy for a target of 1283.75. So again, we're bullish above 1268.50. We're bearish below. We do have a pivot, and we are going to find a little bit of resistance at the 1273 and a quarter, 1273.50 area. And then if we get through the 1283.76 area, we've got 1286.75. So we've got 1283.75 and a possible extension of 1286.75. Now to the downside. If it doesn't hold 1268.50, I'm looking for resistance at 1265 and a quarter. Could roll down to 1260. Now if it hits 1260, again, that takes out that 1261. So I'm looking at, there are going to be some stops taken out at that level, and it should come relatively quickly down to the 1256.60 area, or 1256.50 would actually be the trigger for the sell. That would be in the sell area, and then this market would most likely liquidate heavily down to the 1251, which I think I gave you that target a while ago, around the 1250 area, based on some projections that I had done in this market. I think I throw those out either earlier this week or last week. Underneath that, we've got 1246 with an ultimate target of 1243, and then a little extension down to 1241.75. Folks, tomorrow being a holiday, being light volume, we've got jobs report in the U.S., we've got Trichet speaking and deciding rates in Europe. Tomorrow is going to be like a Fed day for us, because we are, I think all eyes are on Trichet, so we will find out. But if you don't trade pre-market, it's not going to matter, because it'll all be over before it starts anyway. I want you guys to be careful out there, because this market is extremely oversold and it's extremely weak. So again, that being said, that makes it a very tough market, because the moves can be fast and furious, and the fact it's going to be light volume, they can be even faster, because there won't be the volume there to the downside or to the upside to hold it back. So any moves could be extremely fast and can hurt you. So definitely put your stops in. Know where your supports and resistance levels are, so you know where to put the stops. But be very, very careful. I know that we all love to trade this, but if you don't have to trade it, it might not even be a bad idea just to stay out and enjoy your weekend, because tomorrow may be maybe a nothing day, but it may be a crazy day as well. There's no telling. But with this price destruction we've had, it can get pretty ugly. However, keep in mind, we did complete a successful retest of that 1261. Okay, well guys, I will probably do a weekend update. I am going to start doing some videos on the indicators that we use intraday. We do have quite a few of them, and I want to show you how to stay on the right side of the market. We have some moving average angles that we use. Basically, it gives us the angles of the moving average, and they tend to work very, very well, especially with the futures on, believe it or not, a 1-minute chart. And they work really well on 3s and 5s. We also have what we call the 1, 2, 3 topping and bottom patterns. We have those. We have all many indicators. We have what we call connexes, which is contraction expansion indicators, which is when the market contracts and then expands. So what happens is you're basically contracting the energy and then you're expanding it. So we know there's a move coming, and we just want to be on the right side of that. So I'll go over all that. Maybe I'll do a few over the weekend if I have time, and show you guys what I'm using. Maybe whatever platform you have, there's probably something similar to it out there. But it does help. It definitely helps us stay on the right sides of these trades. And I'll show you where where we look to sell retracements and buy pullbacks, based on these indicators. And I'll try to do something as best I can for you to keep you guys on the right sides of these trades. All right, have a safe and wonderful 4th of July, and God bless. Take care.